Yes, Surendra, you can start.
Yeah, welcome to the session, guys. Today, myself presenting about Sundaram Finance. Yeah, the thing is, this Sundaram Finance is a deposit-taking NBFC which is engaged in retail finance and more focused on commercial vehicle financing. They have a simple vision, like to be most respected NBFC in the country. Coming about the company, it was established in 1995 by, sorry, it is 1955. I might be wrong. It is 1955 by T.S. Santanam, one of the son of T.V. Sundaram and Iyengar, and is headquartered in Chennai, India. Company had celebrated Diamond Jubilee in August 2014. In 2018, it demerged its non-financial investments in other sectors like automotive and manufacturing businesses into a separate entity, and it is holding Sundaram Finance Holding Limited, and it is holding all its investments in other industries through this holding limited, and it also holds a bunch of percentage in Sundaram Clayton and Wheels India and Brakes India. Coming to subsidiaries, Sundaram Finance Group has uh, getting its most of the revenues from Sundaram Mutual Funds and Sundaram Home and Royal Sundaram General Insurance and Sundaram Finance. And also it has some other subsidiaries, Sundaram Asset Management and uh, LGF Services. It has a joint venture with Royal Sundaram General Insurance with 50% stake, and 40% is held by AGAs and 10% by Indian investors. Coming to the milestones, here are some of the milestones of their journey in the from 1954 to till date. In 1972, it came up with an IPO. 96, it started a mutual fund, and all those details you can go to it. Coming to the promoter and board, yeah, Sundaram Finance has promoter holding of 38.49%, and the remaining FIs and FPIs hold around 14%, and banks, mutual funds, and public holdings you can see here. Coming to the promoter, the interesting thing is here there are 77 individual family members in the promoter group where their shareholding ranging between 0.01 to 1.67, and it also includes some holding limited companies in the promoter. We'll come into it later. Let's look at FI and DI holdings. And here are the majority of the portion is held by Nalanda Indian Equity, Axis Mutual Fund, and ICICI, and so on. Yeah, we'll get into the reason why it is having more number of promoters. It takes just 2 minutes to explain, but it will be useful for in analyzing in future about the TVS group of companies. So I would like to take 2 minutes to give a brief. Uh, the group companies work together almost a single unit with a lot of transaction between them. Most of their companies are into the auto and ancillary value chains. In the early 2000, TVS Group has included its fourth generation family into the businesses, and at the end of 2010s, it has around 50 companies operating under TVS Group with around 40,000 employees. And as fourth generation is entering into the business, they felt like it is a difficult when compared to when we see into so many companies and holdings, cross holdings, and all. They have decided to split the group into based on the managing control of the families. In late 2020, group announced the splitting of various streams of the family, and by the end of 2022, the split was completed. And after post restructuring, existing management of various listed and unlisted businesses in the group would continue to be managed by the same family members, and the TVS brand and Sundaram brand will be allotted on royalty fee basis for everyone in the family. This is the reason post post restructuring, the families are still holding 0.1 to 0.01 to 0.25% in each other family businesses. So like it expanded to fifth generation, sixth generation, and all these are included in the 77 promoters holdings, ranging between 0.01 to 1.67. That is the reason. And coming to Sundaram Finance, the main founder of TVS and Sons Group is TV Sundaram Iyengar, and their second generation is has four children, and these are the third generation. We must focus on this part of the. He has two children, Vijay and Ram, and both are acting as promoters in Sundaram Finance and Wheels India, and are directors in both of them, and also Breaks India. Coming to fourth generation of their family, Harsha Vijay is the one who has more focus on Sundaram Finance. So if one should focus on him, who is uh, researching on the company in future also. Coming to the board of directors, as I said, the family members have all the four family members. You can see non-executive and non-independent directors, and independent directors and executive directors. In executive directors, Rajiv Lochan is the key person who is responsible, like is the managing director, and he's the one you can see in the interviews talking about the company after every quarterly results. And also you should notice that Harsha Vijay is the one who is drawing highest remuneration among all their employees, and Rajiv Silochan is second to him. Coming to their business, yeah, they are into home finance, vehicle finance, asset management, general insurance and equipment leasing, and also financial service distribution. But most of their focus is on commercial vehicle finance. They also include products like diesel financing, tire finance, car finance for old and new, commercial vehicle finance, construction and farm equipment finance, and also leasing solutions for CVs and construction equipment and farm equipments. Have a look, can you have a look at their funding from where they are raising their funds? We see they have a lot of their funds from debentures, and next to it, bank borrowings and securitization and deposits. They have deposits of around 15%, and through some commercial papers. This is the how they are raising their funds. If you see their lending pattern, they have their portfolio. See, commercial vehicles is used to dominate their portfolio of around 50%. Next to it was car finance, and, and next to it is around construction equipment and tractors and other forms. We see where they are lending. Mostly they are focused in southern part of India, and they are trying. You can see from FY18 to till date, they are slowly used to increase their presence in northern part of India too. So they don't want to concentrate on one part, and they are trying to expand, which is a good sign. Yeah, you can see here the sources and distribution of their income. Out of their 100% of income, interest income is 87%, and income through lease, rental, and other dividend forms, because they have their investments in some of their subsidiaries. So their dividend income is around 2.42%. And you see their distribution for financing costs, cost of borrowings, operational expenses, taxes. They are paying dividends. The thing is, they are paying good dividends and their earnings and all. So if you look at management commentary in annual reports and some of interviews, the last two quarters of FY22 witnessed a gradual pickup in this activity, and they see that urban demand appear to have maintained an expansion, and still the weakness persists in rural demand. And also in the scenario of inflationary and interest rates hiking scenario, they are expecting some pressure on their net interest margins to pre-COVID levels of around 4.25 to 4.75. Right now, their NIMs are around 5.1 to 5.2 like that. So they are expecting some pressure on NIMs coming ahead. And also, they are saying that management is saying CV industry volumes are recovering and they can see a good jump coming ahead. And overall, Indian commercial vehicle industry also registered a 1% growth in year 1% on year-on-year basis. And they're saying they retained their AAA rating by ICRA and CRISIL, which is a good sign. Yeah. Coming to risk mitigation and underwriting. During ILFs and crises, they're saying that they are able to withstand the market pressure without any dislocation. And also, they have taken some measures in order to maintain their liquidity. It tightened its credit filters, and also it increased the presence in construction equipment and intermediate light commercial vehicles and tractor segment, enabled them to register a healthy growth in these times. And you can see the AUM keeps on increasing gradually, even in the crisis situations. And the NPS and GNPS are also good. In first quarter of FY20, they saw a little bit hike. This is due to the pressure they faced from the liquidity. And coming to their risk mitigation strategies, they have asset liability committee which primarily focus on liquidity and interest rate risks, and enterprise risk management which maps internal financial control and identify risk monitor mechanisms. And they are also maintaining 60% high quality liquid assets in the form of the liquidity coverage ratio. And to to overcome the risk from the interest rates, they are having derivatives positions and hedging the instruments in form of derivative contracts. They have developed early warning signals to monitor and mitigate risks, and they are also conducting awareness programs for their employees. Forensic analysis. Yeah, as I said, the skin, promoter skin in the game is less than 50% because they are always having their hands on other family businesses. And one interesting thing is auditor quality opinion and compensation. The auditor remuneration looks a bit higher than when compared to peers. One should look into it. In related party transactions, as they are having many subsidiaries, there are a number of numerous transactions with the companies, but everything looks good till now. Also, their percentage of goodwill in their fixed assets is 42.63%, which is a thing we should consider. So their overall forensic score is stood at 73 points. Next, coming to key data, their AUM constantly keep on increasing, except in FY22, due to in the COVID second wave, this happened, and their profit, pre-provisions operating profit, it kept on increasing, and their AUM yield on AUMs are looks good. Cost of funding they optimized it, maintained well. Coming to their NPS, there is a significant growth in the NPS in FY22. The reason is they are saying that while the economic slowdown has slowed down, increased cash flow strengths faced by the customers, and also the upgradation of NPS for NBFCs by RBI increased companies' delinquencies during the year. However, they are saying that their credit standards and credit filters stood them ahead of their peers. Their ROE and ROA are looks good in the past couple of years. When compared to their peers, they are able to maintain the standout out of their peers in terms of their NPAs. We can see here their NPAs and are far better than their peers in the same Shriram, Chola, and M&M, which are in commercial vehicle lending businesses. Even in the ROEs, in terms of ROE, Chola has an advantage over Sundaram, though it has a good ROE when compared to other two peers. Yeah, they are saying they have good ROE because of lower credit costs. Peer differentiation. Sundaram has best-in-class asset quality among its peers and superior credit standards. Though in CV cycle downturn, during automobile down cycle, Sundaram Finance not very aggressive in disbursing loans, but focused more towards protecting and maintaining their share across key assets and key geographies. Strong leadership team and low credit cost. Sundaram Finance has low credit cost among its peer groups when compared, followed by Cholamandalam Finance. This is how they are able to maintain good NPS and ROIs. Management is confident on CV cycle uptrend coming ahead, and they are expecting upturn to continue in FY24 as government is more focusing on infrastructure, and even in recent budget, government allocated decent amount on the infrastructure. So they are expecting the increase in commercial vehicle segment cycle. Also going ahead, if the interest rates and commodity prices are stable, they are expecting that customers have more borrowing power, which can increase their double digit AUM growth. Coming to key concerns, we can see before their fundraising scenario, most of the 50% of their funding is from NCDs and debentures. And recently, government has imposed tax restrictions on debt funds, and they removed the indexation benefit. I think it will impact their borrowings for certain levels, and their cost of funds may be increased slightly going ahead because in debt funds through debentures they will try to get for less interest rate. But now, if people are not interested to buy debt funds due to these tax regulations, they might depend on bank borrowings. And this NBFC is highly synchronized with auto industry, so it faces downtime and uptime along with the auto industry. Therefore, it is not like regular NBFC. It can be included in cyclical company. Yeah, as it is a family business going ahead, when new generations come into the family, they might be effectively handled, or it may lead to splits in the group. Thank you.
Wow, super presentation, especially the last part. I think where you are able to connect the news with the impact.
Yeah,
So I think this is where you bring in your critical reasoning ability. So that's super. I mean, this is what I sort of expected because of your experience with equity analysis also before. Great job.
thank
Um, the second thing that was also great was the start where you tried to explain the family structure, because the Sundaram group, it's a huge family, exactly, and you went through the entire family structure to identify who's that key person who is responsible
yeah,
for it.
yeah, yeah.
So
This
that's
took me a lot of time actually,
mm,
because I didn't find.
sorry, you got stuck, Surendra.
Yeah, can you hear me?
Yeah. I think you got disconnected for a sec. Please continue.
Yeah. No, I'm saying that this data, like I worked a lot for this data because there is no proper data like this in any Google search. So I referred many articles which were published
Mm,
during their in 2020 during their splits. So I can try to
got it.
figure out some data.
Got it. What would be good, Surendra? Whatever articles, if you have it bookmarked or from your history, could you also add that as a resource for this? I think this is pure gold. Anybody who would like to read through this, I think they'll probably want to see the background information, right?
Yeah, yeah,
As a resource
definitely.
slide, you could add it end.
Yeah, definitely.
Perfect. Great. Yeah. Nirvan,
Yeah,
thoughts?
I enjoyed a lot, Surendra. Great presentation. What I liked is what Gaurav said, that you understood, thanks to your experience, you understand what is important in a company analysis, and you've brought those angles in. So, for example, your last comment about the fact that 50% of their liabilities are coming from NCDs,
Yeah,
and that market is hit by the government regulation. That's a very valid point. So, we'll have to keep a tab on that. So, also very nice to see that I think Gaurav had made a suggestion once that instead of presenting the board of directors separately, he would like to see some of the things summarized. So, I think that's what you've tried to do with that table. So great, to know that you're listening to such subtle feedback. Family tree is invaluable. I completely agree. In fact, I will separately sit with you because one presentation is not enough to understand. Because
yeah,
understanding this family tree can help us understand, like you said, a lot of companies of the TVS group, right?
yeah,
So yeah,
exactly. And there is a lot much information I got to me, but yeah,
hmm,
I didn't present it here because the way how they split it and how they merged demerged the things to divide
right,
among themselves.
yeah.
Yeah,
No, very interesting, very useful. And I like the fact that you did a summary of management commentary on what they are expecting. Yeah.
yeah,
And one more, and future outlook along with that. One more thing is smart thing, which I think I would expect others to also pick this up, is this highlighting that you've done, right? So sometimes if it's a text heavy slide, it's a good idea to just highlight the only the keywords that you want your readers attention to go to. Yeah. If you complement this with an animation where the points appear one upon your click, then you control the flow of the presentation completely, because you're making the person focus on the highlighted area, plus you're not letting him get distracted by text which is coming later, right? So good job here, Surendra. Overall, great. So a few questions about this business.
yeah, definitely.
Why do they have such high goodwill? Have they grown a lot by acquisitions? Have you been
Yeah,
able to analyze that aspect?
yeah, I think we need to do focus on it.
Great.
Um, that thing
So
we
I
need to
think,
focus. I do
yeah,
didn't
so
get exact the solution for that.
sure, because goodwill means goodwill can come on a balance sheet only through acquisitions. Yeah. So that
Yeah,
means Sundaram has grown through acquisitions, which seems a little counterintuitive to me because Sundaram is not the kind of company, Surendra, to go ahead and just acquire anybody. So it might be the case that group companies were acquired, or something like that.
yeah,
Okay. So that will go in as one of the follow up investigation items. That you
yeah.
need to research
And
into. Yeah.
one more thing the management always try to say is like they have more trust rather than like so they feel like their customers once who come to them have more trust in them and
Yeah.
that was they're saying one of the reason.
Yeah, yeah, no, that's true. So Sundaram has a reputation of being a very stable, trustworthy kind of company, not a flashy company. So and one interesting thing, guys, about this company, I think this is one of the rare companies which has been listed for rare financial companies, which has been listed for 30 years, okay, or more,
Yeah,
but it has not done a fundraise ever. It has not raised additional equity ever. So the original shareholders have never been diluted. Can you
yeah, yeah,
imagine this?
yeah.
So,
The
so
shareholder.
this,
Yeah,
yeah, go
exactly.
ahead, Surendra.
Yeah, what you said is since last 10 years I checked there is no equity dilution.
Yeah, from the time of the listing, I think there is no equity dilution. So,
Mm,
one exercise for you guys, go check Bajaj Finance. Okay, Bajaj Finance from Screener, uh, and compare from 2011 to 2023, in the latest year, how much is their increase in equity. Okay, so the total PAT, the total profit after tax that they've generated in each of those years, if you take the starting equity, if you add all the PAT and you subtract all the dividends, then the resulting figure should be the final equity, right? So basically, final equity equal to starting equity plus PAT generated minus dividend paid out. If you notice for Bajaj Finance, you will find that the final equity is much higher than what that formula is giving you. which means Bajaj Finance has always successfully, when its price has been high, it has gone to the market and diluted to raise more funds, right? So it gives it a growth runway because you need more equity. The more equity you have, the more lending you can do. But at the same time, it dilutes your existing shareholders a little bit, right? So Sundaram, in contrast, has grown only through internal profit generation, right? Because the equity growth that has happened in the company has happened purely through whatever profits that they want. Yeah. So this is a very interesting aspect. Keep in mind this. Got to learn this from another investor very recently. So I was having a debate with that person on which bank is better, HDFC or Kotak. Yeah. So if you just look at the equity from 2011 to 2023, the equity compounding of both the companies are pretty much comparable. Yeah, both have compounded equity at around 20%. But HDFC has done very less fundraisers. It has mostly compounded equity via PAT. Kotak has at times gone to the market and diluted and raised equity from market. Yeah. So both of them are not exactly the same. I would place more importance on a company which is able to do it internally, because tomorrow if markets fancy changes, yeah, and you're no longer rated that highly, then you will have to dilute at lower prices, which means more dilution to raise the same amount of equity, right? So if you depend rather on your internally generated profits, it's always better. So check this calculation, guys, for Sundaram and for Bajaj
Um,
Finance. This will give
Nirvan,
you some
I
insights.
have a question on this
Yeah.
one. What if a company who understands their business and also is able to value themselves, right? If the
Mhm.
market is overpaying for their company, what's wrong in diluting it and raising more money? Because these are all risk-free money, right? Isn't it? And in a contrary, when the market is undervaluing, severely undervaluing it, they might use that equity to kind of buy back a lot of shares. So
Yeah,
if a
there's
company uses that sort of an approach, I would say these companies have a better grip on their, I mean, their future or their valuation.
See, Gaurav, the way I would see it is that that's a very smart thing to do, what you're saying, and that's why market doesn't punish Bajaj Finance or Kotak
Hmm,
for doing this, right? So market clearly loves the fact that they do it. They don't mind it because they are able to raise equity at very high prices, so dilution is not very low, right?
hmm, hmm,
But according to me, if you're a conservative investor, you would realize that okay, it still depends on market fancy, right? If you get addicted to equity raises in order to keep growing, it might be a hindrance. If suppose Uday Kotak resigns, okay,
hmm,
and after that the market starts devaluing Kotak Mahindra, okay,
hmm,
because key man risk, the key man has left and he's resigning in December.
hmm.
So then if Kotak may not be able to dilute at the prices which at 4x price to book, right? It may have to dilute at 3x price to book. That will
Right.
impact its ROE, and there is a cyclical, there is a whole, self-fulfilling prophecy kind of thing, which might happen if the bank sort of doesn't perform well. So my limited point is that one is a self-sufficient way of doing things, and the other depends a little bit on the market. Yeah. So as long as your image is good, as long as you're doing the right thing, you're performing well, the fundraising strategy will work great.
Hmm.
But if suppose something changes in the company and market perceives you a little less attractively, then you may have to dilute at slightly lower prices. That might impact your ROE. That's it. Otherwise, there's no right or wrong.
Right, right. Got it. I mean, I'm not sure whether this analogy will come. I mean, whether it makes sense. But say, for example, you have a key man risk, and the business kind of starts getting devalued because of issues which might optically seem very wrong for the business, but maybe the management, with their knowledge about the business, have some idea. So, say for example, Uday Kotak leaves, and the company gets devalued. It goes a bit. I mean, it reaches to say three times price to book. At that
Yeah.
point, if this company actually buys back, I would be very confident then probably about this
Uh,
company structure. Wouldn't you say?
Yeah, so see, buyback, you would have to sort of compare, Gaurav, that if
Hmm,
they were deploying this equity in the market. So when a company buys back, it makes a decision. It basically tells that I don't have opportunities in the market which can give me good enough ROE. So let me buy back my own stock because we feel that investors will earn a better return through that, right? So it's sort of because you're using your capital to buy back your own stocks, right?
Got it.
So basically you're telling that I don't prefer to go out there and deploy capital in my business. Rather, I prefer to reward my shareholders by returning cash, right? That's effectively what you're doing. It's the same as dividends. Cash buyback and dividends are effectively the same, two different ways of doing the same thing. So in this case, for Kotak, with a country which is a poor country which is trying to develop, I would say chances of buyback are very less. It's not
Hmm,
like IT.
hmm, hmm.
So you would probably, I mean, in the banking context, that may not
Yeah, in
be
the
a
banking
viable option.
context, it may not make sense.
Yeah,
It also hit me. But if it
yeah.
were, say, a manufacturing company, probably because then it would have made a bit more sense,
Yeah,
probably.
see, in
Yeah.
banking the difference is कि ग्रोथ का कोई लिमिटेशन नहीं है, ठीक है?
Hmm,
यहाँ पे तुम जितना लोन दोगे उतना लोन अब्सॉर्ब होगा, ठीक है? मैन्युफैक्चरिंग कंपनीज विल हैव ग्रोथ एज अ लिमिटेशन कि इसका इतना ही डिमांड है, एक्सेट्रा. सो
correct.
या, सो योर पॉइंट इज आई थिंक वैलिड फॉर मैन्युफैक्चरिंग और आईटी कंपनीज. यहाँ पे आई थिंक बाईबैक तो मैंने तो देखा नहीं है यार फाइनेंस
Hmm,
कंपनीज में.
hmm, hmm. Makes sense. Okay. Yeah.
Yeah, but I really like the fact that Sundaram has never, it basically goes with their attitude and outlook of being a conservative company, right? They don't want to depend on markets fancies. They want to stick to what they know. Just one more minute, Surendra, can you go to the metrics once? I got confused in where you're comparing with the peers. Can you
Yeah,
show the N?
GNP were higher than
Yeah,
Yeah. Yeah.
NNPA.
GNPA
Exactly.
and
That was
NNPA. I didn't
also.
understand that slide.
That must be error, some typo.
Yeah, but I want to understand what the actual figures are. Can you put it on presentation modes then?
Sure.
Okay, so uh, yeah, so 2.2 and 3. Okay, so can you explain the figures? Like for Sundaram, 3.8 is GNPA, 2.2 is NNPA. Got it. So,
Yeah,
okay. For Shriram, it's 7.1% GNPA, Chola 6.8% GNPA. Because the color is also changed. So, like, I mean, your orange color is GNPA for Sundaram, but NNPA for the others. So I got very confused here. Okay. So the
I
higher
typed
figures are
in
GNPA.
Excel.
Yeah, yeah, yeah.
Yeah,
Okay, got it. So, so Sundaram's GNPA is 3.8. Everybody else has double the GNPA. That's the takeaway from
yeah,
this
yeah,
graph, right? And similarly,
exactly.
NNPA is almost 150% of Sundaram's NNPA. Okay, got it. Uh, okay, in all these presentations, guys, not here. Go back to the previous slide, Surendra, the where you're showing the yearly metrics. Yeah, here I've already told you guys. Please add the 9-month FY23 figure also. Yeah, so that you can
Yeah,
get from the financial report, Surendra. Whatever quarterly report comes, now you may have to
mm,
spend a little bit of time in calculating the PPOP or cost of funds or yield, etc. But try to add the 9-month figure like you added for AUM, because
yeah,
if things were going very well till 2022, but this year things have fallen off a cliff, we should know that, right?
yeah,
So try to
yeah,
capture the 9-month. Yeah.
definitely.
Okay, great. Yeah, I really enjoyed listening to the
Yeah.
PPT. Thanks.
Great. I'll stop present recording.